Well, good morning, everybody. Welcome to the Wealth Guardians radio program. I'm Doug Ray, and Brice is right along beside me. Brice, you just got back from vacation. How was it?
Doug, you granted me a week off. I do appreciate that. Thank you very much. The wife and I, she happened to have a little week-long furlough herself, and we headed off to the beach. You know, believe it or not, this is embarrassing to say, but I've lived in North Carolina for a total of 18 years now at this point, and I have only been to the beach, to two beaches, Wilmington a couple of times, and Myrtle Beach now twice. Those are the only beaches I've been to, which is a crying shame because I love the beaches. I always end up going to the Caribbean instead. But we went to Myrtle Beach, and I got to tell you, I'm not as young as I used to be. The kids going up and down the strips there with their souped-up vehicles was not my cup of tea. We went up to North Myrtle Beach. That was much nicer and quieter and calmer. We went down to Murrells Inlet. Loved that. I wish I could find it. If somebody out there knows of an entire town that looks like Murrells Inlet, please let me know, because that is what I'm searching for. But yeah, we had some fair weather. Water wasn't too warm yet, but we got a week off, and I got away from the grind, and you got away from me for a bit. So it was a vacation all around.
Yeah, but you know, you're a biker. You do know they have a huge bike rally down there.
I do. I did stop into the Harley store while I was down there, while my wife went shopping elsewhere, and that is still on, though I'm not sure that I will be attending that one. But yes, I would look forward to walking through all those amazing vehicles at some point.
Well, I'm glad you got to recharge your batteries. So, folks, once again, we're going to start our program out by thanking all of our service members, our vets, our first responders, police force, fire,
healthcare workers,
healthcare, families. Thank you for everything you're doing for us.
We do appreciate it, and the families as well. Thank you for doing what you do and sacrificing what you sacrifice to help us enjoy what we do enjoy here in the United States day in and day out.
So, Brice, the market, since you've been away, has been kind of roundabout, up and down.
Up and down.
Seems like we are kind of on the upswing this week.
This week.
This day.
Yeah.
Of course, this is Saturday, so it's not Sunday is not working. Market's not even open, but who knows? I mean, it's a crazy time. It gets scared of talk of resurgence in coronavirus. It sells off one day. Last week quite a bit, then it starts to recover, and so we seem to be in recovery mode.
And some days you get an extreme down and an extreme up in the same day. And just whatever happens first, you almost want the down to happen first so it'll close on the up at the end of the day. Yep. But yeah, so Doug, that leads us to our first segment here of we thought it would be a good idea to fill in the people out there listening on some definitions that you might hear in the financial world, that they might hear these terms being thrown around these days and just not know what they mean. So we thought we'd enlighten you a little bit on some of the terms that are kind of key in our world. So, Doug, I'm going to throw out a couple here.
All right.
And you just tell us a quick, easy definition for them. So let's step into the classroom here and look at some of these financial terms. We'll define them. We'll find out if they're important for the typical investor and saver to know about them. So let's get started here, Doug. Accelerated death benefit.
So most all life insurance policies that have been manufactured in the last 10, 15 years have this ability. And simply put, basically it says if you have been diagnosed terminally ill within a year, then you can accelerate the death benefit on your policy and use it for whatever you want to use it for. It still comes out tax-free.
Okay, very good. How about AGI? We always hear those initials, AGI, but I think the average person out there doesn't know what AGI stands for.
Well, you know, it's a calculation you use on your 1040 return, which, by the way, folks, right now is not due until next month.
That's right.
July 15th. So you start with gross income, you take out a few or add back in a few more items, and you have the adjusted gross income. And that's pretty much what most people go by as adjusted gross.
So it's just a tax definition to figure out how much you owe or get back. Okay, very good. Let's move on to fundamental analysis. One of the first two types of analysis we're going to talk about, fundamental analysis.
Yeah, so, you know, when we sit down and we study markets and stocks and companies and things like that, there's fundamental analysis, and that's basically what it sounds like. It's looking at profit and loss statements, balance sheets, gross sales, sales trends, profit growth, that kind of thing. And let's juxtapose that with technical analysis, because
Okay.
technical analysis is completely different. I love technical analysis. I consider myself a technician. So it's looking at price action of both a market and a stock. It's looking at relative strength, typically versus the stock versus the S&P 500, accumulation distribution. All kinds of things roll into technical analysis.
So if you were looking for an undervalued stock, which would you use, fundamental analysis or technical analysis?
Well, if you're looking for undervalued, I think you'd have to look at fundamental.
Okay, fair enough.
So, Brice and I, you can tell we really want to educate folks. That's why we're doing these definitions right now. We want to help folks out there in the triad become well prepared for your retirement. So as we do each week on this radio show, we want to invite you to call us and go online and secure a complimentary financial review with our team.
And also what we want to do is we want to challenge you. We're going to challenge you to take action and do it now, not later. Not because we're trying to be pushy, that's not who we are, but it's kind of our first step in coaching you to a better financial place. And we both know from years and years of experience that those who procrastinate make the most mistakes and they regret not taking action sooner. That's not just in the financial world, that's across the board.
Yeah, so go ahead, take that first step. Go out and let's help you get that full-blown financial plan, one that's going to get you to and through retirement. All you have to do is call us at 336-391-3409. Again, 336-391-3409. Or go online at thewealthguardians.com and click that blue button to schedule your second opinion meeting right now. And during our review, we're going to help you figure out all the elements of your financial plan. So, for example, we'll help you pick the right Social Security election strategy. We'll make sure your plan is built to weather rising inflation and taxes. And we'll make sure you have the right income plan to place and maintain your lifestyle throughout your retirement years. And that just scratches the surface of our process.
Just scratching the surface. Our process, if you were to sum it up in a word, it's comprehensive, but it is not difficult. The hardest part is right now getting off the porch, getting off the couch, and picking up the phone and giving us a call to get that complimentary financial review. And we like people. We look forward to visiting with you. Doug and I like what we do. We like going through this process, and we make it as painless on you as we can. Just give us a call, 336-391-3409, 336-391-3409, or get your free second opinion review online at thewealthguardians.com. Just click the blue button and we will help you out. We look forward to it. So, Doug, let's move back now to a couple of more of our definitions here, shall we?
Yeah, Brice, why don't you pick up this next one? It's called margin account.
Nope. I'm going to let you do that one, Doug. I'm not going to talk about margin account. You have much more experience in these alternatives than I do.
Well, it's because it's risky, right?
That's true. I'm not a risky person.
So what happens in a margin account if you've got a non-qualified brokerage account and you have securities in there and you elect to use the hypothecation agreement, which basically says, okay, brokerage company, you're going to loan me money against my stock or mutual fund values. So basically, if you had like a $100,000 account, they would loan you 50% more. So you'd have $150,000 of buying power.
So you don't have to front up the money. You use your stock as collateral.
I warn you, it's risky because leverage works great on the way up, but on the way down, it could smash you.
Very good. All right, Doug. Well, thank you for that. The next one is junk bonds, and if you want me to take one, I'll take that one.
Take that one.
Junk bonds, folks. If you go out to a bonds, or you're giving credit to either a municipality or a country or a company, you're lending them money in return for some promissory notes. Every company, just like you and I as an individual, we have different credit scores. And we have different levels of risk that if somebody was to lend us money, that lending institution is taking. A junk bond is that you are getting a bond from a company or a municipality or a country that is not entirely solvent. And the lower their credit rating, the higher or the junkier the bond is. Yes, you're going to get a higher rate of return by investing with those, taking that on, but there's a larger chance that you would never get your money back in the end anyway. So that's what a junk bond is. There are secure bonds out there, AA rated, AAA rated, B rated, etc. Junk bonds are your low-end bonds that you're taking more risk to get that higher return, just like a bank is taking more risk by lending money to somebody who is in debt already or who's had a bad credit score.
Well, Brice, before we go to the break, I think you have a trivia question.
I do have a trivia question. We're going to tie it into my little trip out to the coast here. And Doug, you're not going to know this, and I warn everybody else out there, if you try to Google this real quick, you're not going to get the answer either. So when wife and I were taking a little boat trip around North Myrtle Beach, there was a lighthouse out there. And it was a show lighthouse. It's not a real one, apparently, but it sure looked real enough, so it was pretty cool. And it got me to wondering, I knew this answer, what is the tallest lighthouse in the United States? Now, like I say, if you look this up on Google, you're not going to come up with the right answer. So we're going to leave you with that for the break. Stick around. When you come back, I'll give you the answer to what is the tallest lighthouse in the U.S. Stick around, folks. We will be back in just a few minutes. And welcome back to the Wealth Guardians radio show. Thank you for sticking around through the break. I'm Brice Payne. Also, here's Doug Ray. And we left you before the break with a trivia question. And that trivia question was, what is the tallest lighthouse in the U.S.? And I knew the answer to this. That's why I picked it as a trivia question, because I like to sound smart. But, Doug, you didn't know the answer to this, but you're going to take a guess at it. What do you say?
Yeah, I am going to make a guess, and I know since you love to throw curveballs at me, this is not going to be the right answer. But I'm going to say Cape Hatteras.
Well, that's a good guess, because Cape Hatteras is actually the second tallest lighthouse in the United States at 193 feet. And I warned you all not to Google it, because if you Googled it, you would have come up with Cape Hatteras. But the actual correct answer is, Doug, drum roll.
I don't have one.
You don't have a drum roll?
No, I don't have a drum roll.
The Statue of Liberty is technically the tallest lighthouse in the United States.
I told you, curveball. Doggone it.
How tall is the Statue of Liberty from the base?
I don't know.
305 feet. So if a lot of people say, well, that doesn't count. That's not a lighthouse. If that's a lighthouse, then, the buildings in New York City are lighthouses. Well, actually, the Statue of Liberty has been operated by the U.S. Lighthouse Board up until earlier in the 20th century, where it was turned over. But the torch actually does officially represent a navigation beacon for aiding sailors. So it is technically a lighthouse. So there's your answer, folks. One more reason to love Lady Liberty there. So, folks, if you're 5 to 7 years from retirement and you want to confirm that you're making the best decisions for retirement, we offer a no-cost, no-obligation second review so that you can learn how to retire the job and keep the paycheck. We talk about that all the time. All you have to do is pick up that telephone device that it's either in your pocket or it's sitting on your kitchen counter, 336-391-3409. That's all you got to do. We would look forward to meeting with you and helping you out. Now, Doug, in the first segment, we were talking about definitions that people might not be familiar with. In this second segment, we're going to be talking about Mark Twain, the man himself. And we're going to be pulling up some quotes of his and seeing how they pertain to our field of business here, financials. So what can Mark Twain teach us about money? So, Doug, you want to take that first one? Read the quote, and then we'll talk about that.
Apparently, there is nothing that cannot happen today.
I would guess, though, that if he was alive today and then flash back to then, he would probably say, no, there were some things that couldn't happen back then that can happen now. So it's truer now is what I'm saying than it ever was.
Oh, I mean, we're living through that time right now.
It's truer today than it was even yesterday, it would seem, unfortunately. If anything can happen in today's world, and obviously it does, we have to be sure that our portfolio and plan is able to withstand whatever comes our way. And the question would be, do you know what happens to your savings if we experience another 2008-like downturn, or if there's a spike in interest rates? Doug, that's a main question that people that sit down with us think they have the answer to, and they end up not realizing how volatile their portfolio actually is.
It's typically an eye-opener for most people to see it.
That's why we call our second meeting with them the eye-opener meeting. That's right. Mm-hmm. What do we got for the second one, Doug?
The lack of money is the root of all evil. Now, that is a twist on a Bible verse. It says the lust
for the lust of money,
is the root of all evil.
That's right. So the lack of money is the root of all evil, is the way he saw it. Mm-hmm. In retirement, one of the main goals, if not the main goal, is making sure that you always have an income coming in. And as long as we have the income that we need, most other things will fall into place. But if something happens to our income, that's when things start to fall apart. And Doug, we've told our clients it's not necessarily how much you've saved, it's how much income you can produce off of what you've saved for retirement.
Absolutely. Absolutely. And I love this next one coming up.
Okay.
You ready for it?
I'm ready.
Suppose you were an idiot, and suppose you were a member of Congress. But I repeat myself.
Mark Twain always had the way with words, didn't he?
Did.
Yeah.
I love him.
It should probably go without saying that your retirement plan needs to be able to survive whatever happens, not just out there in the world, but what happens on Capitol Hill. A lot of people spend too much time worrying about the next election and getting the right people in office because they think that will prevent problems for them in the future. Take charge, folks, of your own situation, so that tomfoolery that goes on in the belt up there in D.C., it doesn't affect you financially to the point that you spend too much time fretting about politics. Doug, that's a great one.
And again, it's very appropriate for current events. I mean, Lord, have we seen tomfoolery in the last few years.
Boy, more so than ever.
And I'm afraid it's going to even be more as time goes on into this election season.
Okay, the next one here, I like this one. We're not in October yet, but the quote is, and again, these are Mark Twain quotes, we're not making this up, October is one of the particularly dangerous months for speculating in stocks. The others are July, January, September, April, November, May, March, June, December, August, and February.
Well, he does have a way with words, but, technically September, historically, statistically, has been the worst month for stocks. But the bottom line is, you've got to protect your portfolio. If you're close to retirement, if you're in retirement, your paycheck is stopped, and you can't afford to lose money. You've got to make sure that you have some kind of downside protection.
Let's talk about, Doug, our process that we do with our clients and how we help them protect that portfolio. We're not just financial advisors. We are fiduciaries, which means we are obligated to act on our clients' best interests, as opposed to the suitability standard, which most advisors operate on. But we're also retirement specialists, which means we focus on that one specific time frame of one's life where you have to make sure that everything is aligned properly. So we sit down with our clients who some of them might already have a financial advisor and they want to get a second opinion. Others might have never had a financial advisor in their whole life. They've just saved through their 401ks and put it into some mutual fund in their IRAs and done it all themselves, and now they're looking for an advisor for the very first time. So, folks, if you are somebody who thinks that you're a few years away from retirement, or maybe retirement has been set upon you against your will a little sooner than you had hoped, and you're not 100% sure about what your portfolio looks like, what would the next crash, how would that impact your portfolio and your retirement, that is who we want to meet with. And we want to sit down with you and ask you all the pertinent information that we need to know so that we can understand where you're at, what your risk tolerance is, all of those necessary information, and we put your current portfolio through a number of different third-party analyses so that we can show you what the good, the bad, and the ugly is of how you're currently aligned. Maybe it aligns perfectly with your risk tolerance and it matches perfectly with your time horizon. If it does, maybe it's because of you've done a good job yourself or you have a great advisor. We are going to tell you that. We are going to say, we can't improve on your portfolio at all. You've done a great job. Nothing we can add to it. We don't do that too often, but we have done it when it is appropriate. Then we're going to start building some recommendations on how we can improve your portfolio, how we can make your retirement all the more secure, less risky, being exposed to less volatility, yet still producing a reasonable rate of return. And then if you like that, if it makes sense to you and you trust us and you like us, then we can help you implement those changes to your portfolio seamlessly, painlessly. All of that is a no-cost, no-obligation process. So if that sounds like what you're looking for, if I just described you more or less, then please do give us a call at 336-391-3409. We would be happy to sit down and talk with you. 336-391-3409 is how you get in touch with us and start this process.
Brice, I'd like to add to that.
Please do.
The stock market has circuit breakers. We saw them kick in March. But my question is, folks, does your portfolio have a circuit breaker?
It's a good question.
All of our clients' portfolios have a circuit breaker.
And the circuit breaker you're talking about with the market, Doug, is when it drops to a certain percentage within a day, they shut down all trading for a few hours. Mm-hmm. And it had been a number of years. It had been almost a decade since we had seen that happen last time. And it happened a couple of times in February, March, didn't it?
It did. It sure did.
And so, as Doug is saying, your portfolio needs to have those same kind of circuit breakers built into them.
Yeah, you can't afford in retirement to have a loss of 20, 30, 40%. Don't even think about it.
Well, it's your source of income when you're in retirement. It's when you're saving for retirement, it's not your source of income. You still have the paychecks coming in. So it doesn't devastate your retirement plans if the portfolio takes a little hit for a while. But once you are using that in retirement, that's a whole different ballgame. Mm-hmm. All right.
Brice, let's jump down here to the last one that Mark Twain said. I like this one too.
Okay.
The secret to getting ahead is getting started.
The secret to getting ahead is getting started. That would be similar to saying the first step is the hardest.
Yeah.
Or the 1,000-mile journey starts with the first step kind of thing. Yeah. For most people, the hardest part of getting a real retirement plan in place is simply taking that first step to simply say, okay, let's do this.
Yeah, perfect. So it's like Nike's slogan, just do it.
Just do it. That's right. It's not going to happen on its own. One of my favorite quotes out there that it kind of goes along with this is a Wayne Gretzky quote, is you are guaranteed to miss 100% of the shots that you don't take.
No, yeah, exactly. And, I think that's the biggest problem for a lot of people. They get into an area where, let's just say they're not proficient at retirement planning. They are whatever, engineers, teachers. They just haven't thought about it. So it scares them and they procrastinate. That is the worst thing you can do. If you don't go into retirement with a complete written retirement plan and know exactly where you're going, I've said this a million times. It's like waking up one morning, say, hey, grandkids, let's go down to Disney. You hop in the car, you got no plan. You don't know how to get there. You don't know where you're going to stop for lunch or gas, where you're going to stay. You would never, ever do that, would you? So, like Mark Twain says, the secret of getting ahead is getting started. I love that. You just got to do it.
Very good, Doug. All right. What else?
Well, in the last couple minutes we got here, I just want to encourage everybody to, we're starting to open up society, it looks like. Get out there, enjoy your life. That's what it's all about. Enjoy your retirement if you're retired. I believe that, we've been cooped up now for what seems like an eternity.
Couple months almost, yeah.
But it's been a long time. We've been living through history. This is nothing like this has ever happened before. And it's time to carry on. Get out there, enjoy your life, and just do it.
But do it safely.
Yeah, absolutely.
Do it safely. Keep your loved ones in mind. And Doug, I'll close out with another American that has too many great quotes out there to count. One of my favorite, Yogi Berra. Mm-hmm. And one of his quotes was, it's deja vu all over again. And I don't know, it was never really answered if he meant to give those quotes or if he was trying to be funny or if they just kind of slipped out of there, kind of like a Joe Biden quote or something. But folks, we don't want deja vu to hit you all over again with your portfolio. If you just hit some pretty significant losses and you're just now recovering, don't let that happen to you again. Give us a call. We can help. We don't bite. It's not a painful procedure to go through. 336-391-3409. We appreciate you being with us this weekend. We hope you have a great rest of your weekend, and Doug and I will see you next weekend as well. 336-391-3409. Take care, folks.